This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks podcast here from Stockbox, where we're joined by both our guests in the same place this time. So Alan Green, as normal, long-standing Research Talk co-host, and of course Dan Flynn. We're all on the podcast together here today. So welcome back to you, gents. Alan, how's your week been, first of all?
Thank you, Mark, and hi Dan as well. It's been a good week actually. Yeah, I have actually cleared some profits on some stocks I sold this week, which
you banked some profits.
It's been a good start to the year, but some of my blue chip holdings took a bit of a step back yesterday after this big correction. But it's overall quite pleased. Yeah, quite pleased. Taking some profits, taking some money off the table. The old saying in the markets: no one ever went broke taking a profit.
No, absolutely not. Absolutely not. Interesting you say that, because I was recording with Darren Hazelwood, of course, from Panther Metals earlier in the week, and he'd told me that he'd reactivated his personal portfolio. Funnily enough, so did I. Didn't put any fresh money in the markets from about 2022, I think, and actually I started doing it again towards the quarter four, end of last year. So it's just interesting that clearly we're seeing, all of us sort of seeing some stimulation and perhaps some value propositions there to be had. And someone pointed out to me the other day, which is a good one, maybe for people looking for perhaps a safer company, BMW, trading at a lower valuation, 8% dividend yield.
Sure,
good, that isn't it?
Yeah.
Yeah,
it's very good. Well, I've also been looking at some funds as well, and an old friend of mine, I raced motorbikes with him years ago, and he's a genius engineer. He's got engineering patents to his name around the world. I introduced him to SIPs in 2010, and he started investing, applied his mathematical genius, and he's come up with an algorithm to choose funds. And he trades through Hargreaves Lansdown. And last year he's got an awful lot of money in funds now, but he added 35% last year to his holding.
Wow.
He took 75 grand out cash, and he says he's already replaced most of that this year.
Really? So that's an algorithm he's written to effectively analyse different funds and their performance, and then but he executes it himself, through HL.
That's it. He's.
Can we see this algorithm? Can we share it?
Well, I have asked him for it. So, but he's actually, I get a regular list of funds that he's invested into, and. Yeah, certainly, I'm in several. Fidelity Global Technology is one. That's one I've held for about 6 years, I think, overall. That's been very good. And I've just gone into Bailey Gifford American, and that was up 45% last year. So that's they're worth considering. And I think when you've got your mix of investments, you've got to look at funds, blue chips. I also hold the tobacco stocks, BATS and Imperial Brands, because they pay a great dividend yield, a couple of financials. So if you can position with funds, position with blue chips, and then obviously the area that we're focused on, which of course is small caps, then
riskier.
Yeah,
riskier stocks, but yeah, I mean, gold amazes me every day. I have my little ticker meter on my desk here, and I can't believe it when it's going to stop. And actually, Dan, I'll ask you how you are in a minute. I know we've kind of moved on, but we had a little discussion, didn't we, about the gold price, what we think it could be. And I'm going to the Swiss Mining Institute, and there's a little wager going on amongst the participants at the SMI of what the gold price would be. That's the 17th of March, and I said 2975. What did you say then? 2950 was it?
I said 2950. Yeah, that's right.
Alan, 17th of March. What do you think?
17th of March. It's
so a month's time from now, pretty much.
Okay, 2995.
Okay, right, so just shy of 3. Yeah. Okay. My thinking was it'll go over 3 and pull back a little bit. That's what I was thinking.
Yeah.
But anyway, we will find out when we. So Dan, how's your week been?
Yeah, no, it's been really good. Like you say, been spending a lot of time looking at gold. It's interesting, isn't it? So the tariff seems to be the major driver here. And I was reading a piece that said that the gold price has gone beyond reality because it should really be depressed by the fact that rates are higher and you can earn a better interest on a lot of other assets because gold doesn't pay an interest. But we're not really in normal times. I mean, you can always say that, I suppose, but with these tariffs, there is a chance that things could escalate. And should that be the case, then I don't know, I wouldn't be surprised to see gold continue rising higher. And you look at some of the predictions from the likes of Goldman and some of the investment banks, not just, random people on the internet. And it seems that everyone's in agreement. So, it's exciting. Like you say, I think passing that 3,000 ounce marker is an important psychological threshold, just like 2,000 was. And the price tends to stay around those levels. But, we passed through 2,000 well and truly now. We're nearly at 3,000. Could we see the same going up to 4,000?
Yeah, who knows?
Yeah. It's interesting.
We've got to see silver catch up that gap as well. I do have a fair bit of physical silver bought a few years ago, and that still just hasn't really moved. So people are calling that for like 300. Be nice if it did, but anyway, we'll see. It's exciting. Excuse me.
Yeah.
For this space, anyway.
It is, though. I mean, gold is such a safe haven, and we're in uncharted water at the moment in terms of tariffs, global outlook, macro uncertainty, and of course the issue with Ukraine. How's that going to get settled? And if it seems Trump is prepared to concede territory without bringing Ukraine to the table, or it's certainly seen that way. So when you've got these factors, I think those are just going to be drivers for gold all the way.
Yeah, exactly.
Absolutely.
Anyway, we're here to talk today about different stocks. We're doing a little bit different format. We're going to talk quite a bit about ONDO InsurTech because they had some pretty good news this week. And then we're going to cover some other companies on the beach and also European green transition, as well as a few words on Orosur, Gfinity and Immupharma. Immupharma, even. Immupharma, that's how you say it. Immupharma, yeah. So we're going to cover ONDO first. So, Alan, do you want to start us off? Give us the sort of refresh on ONDO, then we can talk about some of the developments from this week.
Yep. Well, ONDO is really, really coming of age now, and I know a lot of major investors and also small cap investors are really excited about the potential for this company. Gervais Hedl and Premiumite among them. But the company has got a really simple model, and that's the great thing about ONDO. It's really easy to understand. Craig Foster, of course, the founder, worked for HomeServe, came up with this amazing invention, LeakBot, an IoT-based claim prevention system, which really, really works, and is saving insurance companies millions, if not billions of dollars in claims annually. And of course, this is all based on water damage. We're in a world of climate change where water levels are rising. And of course, these are causing major headaches for insurance companies in terms of setting premiums. And also, people just living somewhere all their lives, all of a sudden, they're finding they're getting flooded regularly. So this system helps the house owner to identify the issue earlier, and of course bring an engineer in, deal with it before it becomes too advanced. And since it reversed into a cash shell, which was Spinnaker Acquisitions in 2022, the company has undertaken a series of trials with major insurance companies around the world, broke into the US in late 2022, and since then it's just blazed a trail. And of course, most recently we heard this week about the new deal with Liberty Mutual Insurance to pilot LeapBot in the USA, and the shares initially spiked up, and then of course they came back and traded around the 15 to 20p mark for a while, but they've since blasted up and they're now trading 37p. And really, I think we're still scraping the surface in terms of the potential here. But a trading update was published from the group, of course, this week too. And Craig Foster said the goal for the financial year was to demonstrate accelerated growth driven by the US, which of course they've delivered. They've also delivered strong growth in the UK and Denmark, partnerships with NFU Mutual, Arm Brand Group, and the company now has a really, really strong cash position too. And Liberty Mutual, I think, was the icing on the cake, launching into 4 states in the US. But they're just building, and obviously, aside from the momentum it's given, the cash flow given, the strength it's given to the balance sheet, I'm sure there are many insurance companies looking at ONDO and eyeing it up as a potential bid target. So it's really in a real purple. It's in a purple patch at the moment. And I think in terms of growth potential, there are so many drivers to take it up to the next level.
Yeah, I agree, and I did speak to Craig earlier in the week just to get there was those big updates from Liberty Mutual. Obviously, very short RNS. I think it has to be very careful what they say when they talk about big listed insurance companies like that. But then there was the nice trading update, which is fantastic. I just want to play just a snippet. Really, it kind of sums up the essence of the interview from Craig earlier in the week, and then we can just finish off.
We signed previously Nationwide, who are the 8th largest home insurer in the US, and that's been a game changer for us over there. As we talked about previously, they started in Ohio. They quickly expanded into 16 more US states. We've taken a lot of other insurers alongside them into that geography. So what we've announced today is we've signed someone bigger again. So Liberty Mutual, or another Fortune 100 US company, one of the largest insurance companies in the world, and certainly one of the biggest in home insurance in the US. So to bring another top 10 carrier on board is a massive win for us, and just shows that momentum that we've got now in the United States. So we've now established this prepayment model with all of our recent partners. And as you can see in the RNS today, Liberty has followed that same pricing model. So all of the recent deals we've done are on that basis. And what it does is it virtually eliminates any new working capital needs from any of the new deals, which has put us in a much better, secure position, because it means to get to EBITDA positive trading in the back half of next year, which we still think will hit, we definitely don't need to raise any more money to get there, which is obviously really good. But what we were really trying to deliver here is a real acceleration in that growth rate, which you can see in these numbers. And that's really been driven by the United States. So 65% of the recent growth has all come from the US, which is still a relatively new market. So you can see in the trading update, we're in 26,000 homes already in the US, even though it's a new market. That's about almost 400% up year on year. But then importantly, the real killer net promoter score and customer satisfaction. And then we show them, they can see them in their own eyes, the damage-causing leaks that we're preventing and the claims that we're saving, and how that translates into an ROI. That's what we've been showing all of our recent US partners as well. And once you show them those results, it only makes partners want to deploy more volumes and expand the footprint. And it's really that what gives me so much confidence about the new signing with Liberty Mutual, because that's the way all the partnerships are going. And now we've signed someone, I mean, Liberty, do your own research on how big they are. They're an absolute giant. I think they probably insure more homes than all of the rest of our partners added together. And I just know that one's going to go the same way as all the recent launches that we've done. So it leaves us very well positioned for the future.
So we can wait to see what more contracts announcement as the work continue, the factory going okay. And of course, you've got the UK water angle as well.
Yeah, absolutely. So more of the same is the aim of the game, Mark. So that's what we'll be doing. So hopefully it won't be too long till we speak again.
Good. Well, thank you very much, Craig Foster, as always. So yeah, there we go. I just wanted to show that I'll play that clip just because I think that really sums up Ondo effectively, doesn't it? I mean, more of the same is the name of the game, and that's really what they're going to be doing. They're starting. You know, it feels, I think, that they're just. Well, I wouldn't even say just, but they're just getting good momentum, I think, in the wheel now. The wheel was turning a while ago, but the momentum is behind them now. And like you said, word of mouth, that net promoter score where other insurance companies are seeing and hearing the success of their peers or competitors and want a piece of it as well because it's working and it's saving money. And the US is really their focus for that. And yeah, working with, another top 10 US insurer. I mean, that's big news. You know, it takes a long time to get into these sort of big companies. Yeah, you know, and what did he say? More homes at Liberty that they've got access to now than their entire previous partners.
Yeah, Liberty insure more homes than the other insurers put together. You know, which and to get to critical mass to that point where you're just throwing off cash, which the company now is, then you know it's a real unicorn in a sense. You know, they've just created this this market which is saving insurance companies millions or billions, literally, in water damage. It's a great model. And I think they will get taken out at some point. Now, I'm sure of it.
When you look at the fact that they're in the trading update that they said they estimate their full year revenue to be up 70% year on year. I think it was a 90% increase in annualized revenue run rate for Q4 in the 2025 financial year. You know, that's already impressive. Then if you add on Liberty with, you know, bigger than all the other clients put together, I mean, you can sort of see if the market, that's a lot of growth. And if the market starts valuing that growth as the company's profile builds, you can see a lot of upside from the current share price, I think.
I think so, yeah. And as you said, Alan, I mean, it sort of spiked up a little bit. I was expecting it to spike up a bit more, and it's actually typically it's actually sitting slightly lower than it was before the news. But you know, that's kind of typical. But it has held nicely from its sort of low. I think it was, you know, perhaps sometime halfway through the end of last year. And as I said before, I opened a SIP, a junior stocks and shares, not a SIP, a junior stocks and shares ISA. It's a bit young for a SIP, isn't it? A 1-year-old. A junior stocks and shares ISA, and I bought Ondo, and it's 200% up. So you know, he's two bagged, and he's not even 1 year old. So I mean, I think that's a hold for the long term. And I think another key thing that Craig said. I mean,
I think so too.
No placings, they don't need it. And the warrant money, this wasn't in the clip, but in the warrant money that came in, they don't need. They're actually using it to pay down the loan they have from HomeServe, which is around 6 million, I think, and that was renegotiated anyway, and it's not really that big a burden on the balance sheet. But key that there is they don't need to raise any more money, and they'll be EBITDA profitable 2026. You know, so I can't see what's not to like, really, unless some major bug comes out. You know, but I can't see that happening. As Craig says, it's more of the same. You know, stick your money in and just kind of leave it, really, I suppose, to grow. And particularly, which I think they will do one day, is go down the New York listing. I think they'll probably have to. Then the floodgates open, and then someone buys them out, I suppose.
Well, I think also it takes a long time to become entrenched within these big insurers. You know, they go through a long due diligence process to assess and this is a unicorn product. There's nothing like this around. So they've taken time to test it. It's gone through that approval process, the validation process, come out the other side. So it's very easy then for the other insurance companies to say, well, Liberty have approved it, so it's a slam dunk. We'll take it. And that's really that's your growth curve. That's the accelerator or the catalyst behind the growth curve, because it's that approval process. That's the hump you have to get over in the first place, and they've now done that. And the drivers are all there. So 200% would be 2,000%.
Well, let's hope so, eh?
Great.
Let's hope so. Yeah, yeah. Good. Well, thank you, guys. So that's Ondo. So I know we want to cover a few other ones in a bit more of a shorter order. Dan, do you want to go ahead and pick one of the ones that you wanted to talk to us about?
Yeah, absolutely. So this week I thought, I mean, we're only in the middle of February, but I thought it'd be a good opportunity to look at a few stocks that have seen particularly big movements upwards so
Sure.
far this year. It's a good thing to see in these difficult markets. So the first I wanted to highlight was gold explorer and developer Orosur Mining, which ticker OMI. So Orosur has shot up since releasing a drilling update from the Pepus prospect at its Anza project in Colombia this month. So the company announced high-grade gold intersections from surface at 4 holes, including one that hit 76.3 meters at 7.24 grams a ton gold. So the intersections are very significant, very high grade, and the fact that gold is being hit immediately from surface is all the more encouraging from an economic perspective when it comes to any future project. So the results that came out this month build on kind of a series of similarly impressive intersections from this Pepus prospect. But I think what has caught the market's attention with the latest update is the company said it's uncovered some soil sampling data that it probably previously wasn't aware of that has highlighted another anomalous area to the north of Pepus. So Orosur's geologists are now investigating this on site, and samples have already identified 100 meters of mineralization at surface, grades of beyond 5 grams a ton. And these efforts will continue, and the goal is to eventually investigate it properly with drilling. So Orosur's jumped 100% year to date on the back of this news as of the time of recording. But with momentum now established, I think there's a lot of opportunity for it to move further beyond its current valuation of 36 million. You know, after all, it already has one highly promising potential deposit, the one where the intersections are coming from. It may have uncovered another one. Drilling is funded for the time being, following a 1.25 million raise in December. And as we all know, the price of gold's soaring as well. So I think this could be one to keep an eye on. I think in particular, the thing to look out for from here, perhaps obviously, are more updates from Pepus. If the company can speak more definitively to the resource potential of the 2 prospective areas that's identified, we may see its valuation continue to rise rather than drift back down, which is something we do tend to see when these companies spike up and then don't follow with more news flow.
Yeah, interesting. And I know I'm going to be speaking to them, I think, early next week as well, so they can certainly pick up on some of those points that you mentioned there, Dan. But it's nice to cover a bit of a gold company there. But it sounds like a sort of early stage exploration, but, you know, they've got something. Yeah,
absolutely. And I think the key thing for me was the fact that this gold is from surface. The closer to surface the gold is, the less money it costs to mine and develop. So yeah, all in all, quite an attractive prospect there. And if this new area they've identified shows, you know, similar prospectivity, or perhaps even more, then particularly in this gold environment, it seems like it can move up a lot more from here.
Okay. Thank you, Dan. So, Alan, let's go to one of yours that you wanted to cover. You want to do On the Beach?
On the Beach, indeed. Yes. Yeah. This is a company I have spoken about on a few occasions in the past, and it's really this came off the back of my trading at the time in Thomas Cook shares prior to Thomas Cook going bust, because obviously the old Thomas Cook business model was, very very fixed cost heavy in terms of airlines, in terms of hotels, and everything else, and you could see it was coming in a way, but a rescue package was expected, and companies like On the Beach took advantage of that. Indeed, the chief executive, Sean Morton, who joined the company, and his FD oversaw the Thomas Cook failure and took full advantage of that and brought customers into On the Beach. And On the Beach are basically, they're one of the UK's largest online holiday package specialists now, and they have this low cost base, unlike the legacy holiday tour operators, allied to a high customer value proposition. And they are a disruptive player, or were a disruptive player in the market. Probably not so much now with the other players in the marketplace. But they're asset light, focused on customers, and they are both profitable and highly cash generative. They're on have launched an advertising campaign recently, which I'm hearing on the radio, and they've employed none other than Paddy McGuinness to really, should we say, poke fun at their major competitor, which is of course Booking.com. Paddy says, "Booking around, you need On the Beach," or words to that effect. Anyway, But the company has an impressive board. So I mentioned Sean Morton. He joined as the FD to oversee the Thomas Cook failure and take full advantage of that. The company was founded in 2004 by Simon Cooper in a terraced house in Macclesfield, and the business grew and listed in 2015. Simon Cooper is still on the board. He's a founder and he was also founder of a company called On the Peace Travel. That was purchased by TUI Travel in 2008. And they have a pretty impressive bunch of non-execs. The Right Honourable Justine Greeney MP. She was MP for Putney 2005-2019. She's a trained accountant. And Richard Pennycook, who's the chairman, formerly worked as chief executive Co-op, also on the board previously with Morrison's, RAC, Bulmer Cider, Laura Ashley and Wetherspoons. So there's a board with real caliber. Now, since December, where they announced full year results, there have been a series of transactions, and these have been share buybacks. So the share price has started to rise, but I still feel there's a long way to go. But based on the numbers that they announced last year, so we saw that they refer to something called TTV, which is total transaction value, and the total transaction value grew 15% to 1.2 billion. Revenues are up 14% to 128.2 million, so that gives you some idea of the revenues that come into the company from transaction value. Margins up to 31.7% from 30% the previous year. Adjusted pre-tax up 25% to 31 million. Cash at bank 96 million. Up from 76 million previously. Now that's the company's got a market cap currently of 418 million, trading 254p, just off a year high of 265p, and a year low of 122p. So it's made good progress, but that cash, represents 22% of the market capitalization. So, for an online operator, that's not a racy multiple at all. So I think this has got a lot further to go. In terms of where they are now, they've seen the growth that they saw last year continuing to this year. The new year TTV, or total transaction value, up 14%, so in line with previous numbers. Bookings growth up 15%. Group winter 24 bookings up 25%. And the summer for this year is significantly ahead of last year. And they're aiming as a group for total transaction value of 2.5 billion, EBITDA of 100 million, that's 40% of revenue, and adjusted pre-tax of 85 million. So that, to me, provides an awful lot of potential upside in the share price. And given the momentum the company has, they've got plenty of cash to indulge in hiring the likes of Paddy McGuinness to undertake their ad campaigns for them. Plus, they pay a dividend too.
They play dividend too. Yeah, I was going to ask what this sort of, you're going for sort of capital growth, but also dividend. Well, obviously dividend and also capital growth, I should say. Yeah, dividend
and capital growth, and there are some good players in the market. But the caliber. I think again with any company, we talked about Ondo earlier. You've got Craig Foster, who worked for HomeServe, and he worked in the lab there and developed LeakBot within the lab in HomeServe, and HomeServe were quite happy for him to spin that out. I bet they wish they took a bit more of an active interest in it now, but But it's about the management. I think you've got a team here, including the guy that founded it from his terraced house in Macclesfield, still on the board, and a really good chairman and some pretty punchy non-execs as well. So yeah, I think this is going to go places.
Oh, thanks for that, Alan. That's a nice one to introduce to. I've just gone on the website. Yeah, Paddy McGuinness is obviously done a good photo shoot with them. You get different deals. I see there, lounge access, etc.
Stop bugging around.
Stop booking around. Yeah, maybe they should get Max on as well.
Yeah, indeed. Paddy and Max. Yeah.
That was a good series. Anyway, okay, thanks, Ellen. So Dan, shall we flick back to you? What do you want to take? Gfinity, it's tech play, I think, isn't it? It was.
Yeah, that's right. I'll just spend a few minutes on Gfinity, which is ticker GFIN. So, listeners might remember Gfinity from a few years ago when it rode pretty high on the esports hype. However, it ultimately lost I think like 99% of its P valuation due to a lack of profitability and changing tastes in esports and in online advertising, as happens often with these sort of tech stocks. But now the company seems to be coming out of hibernation. So it's knuckled down over the past year. It's significantly reduced its headcount, it's renegotiated contracts, it's exited unprofitable assets, and it's restructured to focus on providing digital media content and generating advertising revenues from that. So things ticked along for a bit. And then in November, Gfinity announced a planned combination with a company called OM Technology. So OM's developed AI tech, which specifically targets the connected video market, and that's called Connected IQ, or CIQ for short. And the idea is together, Gfinity and OM will commercially launch CIQ into the market, with Gfinity paying OM a 30% royalty fee. So this exclusive license agreement was finalized earlier this month alongside a $325,000 raised by Gfinity to get things going. And the market's responded well. Gfinity, when I last looked, was up 80% year to date. It's dropped a little bit since the announcement, but with a market cap of just 3.75 million. I feel like there could be some real upside if this move pays off. What I would say though and what I think would help is a bit more detail. Gfinity's yet to go into depth about its plans for commercializing CIQ, and that's fair enough. The deal's only just been signed. Look at CIQ's website; it shows a bit more insight. It's focused on what's called contextual advertising, which is, from what I understand, I'm no expert, but it's basically using AI and machine learning to target digital advertising at the right viewers with unprecedented accuracy. So taking a leading role in this sector could be very valuable for Gfinity. I looked into the numbers, and global digital ad spending is expected to reach $1.5 trillion by 2034 from $650 billion today. So the question is, can Gfinity pull off a leading position in that market? And it's too early to say. In its latest announcement, Gfinity itself acknowledged that CIQ is still at an early stage with a limited sales track record. But, it could happen. And I think the key to further share price momentum from here will be the release of more details about how this licensing agreement will work. Some idea of how profitable it could be as market share grows. And then from there, a bit further down the line, some evidence of how well the product's being taken up. And I'll be really interested to see how it delivers, because if it can, then as we've seen, anything in the AI space, in this evolving tech space in the world that we live in, can really quickly gather some momentum. And I think it'll be to the benefit of early investors at this level.
Good. Okay. Well, thank you for that. It's nice to see a company, you say, reinventing itself in that digital advertising. Isn't that what, Alan, did you just talk about a company that had a similar thing that would do like advertising in games, or am I wrong?
Yes,
Like in the FIFA games, for example.
Was
but
that
actually,
yeah,
was that
that was BidStack.
BidStack? That's the one.
It had an engine that would serve ads across mobile platforms, but also, as with streaming programs now, those ads would be tailored to the user. So
yeah,
whereas
okay.
I might see ads for fine wines and what have you, you guys might see ads for Budweiser or something else, because I'm an old guy, So, but yeah, so that was the principle behind it. But
Okay.
but I think, BidStack. Well, that was the less said about that, the better, really. But I think
Yeah,
the principle is established, and
Yeah.
I think that it's going to be. I mean, the market is absolutely huge, as you said, Dan. It's nebulous, really.
Mm.
Yeah, no, it is. It's huge. So, well, okay. Thanks for that, Dan, and thanks for pointing out the kind of catalysts we can look out for on that. More detail. I think a lot of with these sort of perhaps AI companies, detail is lacking.
It's a bit lacking at the moment, isn't it? Yeah,
but it'll come. It'll come.
Yeah.
Okay. Well, then we've got about 5-10 minutes. Alan, do you want to talk to us about EU green transition and what's going on there? Because I know you follow these guys quite closely.
Yeah, European Green Transition. We work with the company, and this is so those of you that know Carl Friel and his management team in St Stephen's Square in Dublin will know, of course, that European Green Transition is the latest to emerge from that stable. But the team have a focus on capital light business models, and if Carl Friel is involved in a business, then he's often the key driver behind it, and the reason that it succeeds because he knows how to bring a business to market. He knows how to look after shareholders and how to grow a business, and he's done that spectacularly with hVivo, which of course was formerly Open Orphan, and European Green Transition Epico EGC was launched last year to build a portfolio of green economy assets in Europe. To capitalize on the green energy transition, and also to in line with the European Critical Raw Minerals Act, to ensure that it could secure a sustainable supply of critical mineral resources within Europe. Company came to market at 10p. It's slightly behind that at the moment, trading at 9p, but it has been as high as 17p since the IPO. And I sense that we're going to see further momentum in the company this year. The principal assets it has are the Orosur Rare Earths project, which is based in Sweden, the Limni Copper Tailings project in Cyprus. It has the Pajala Copper and Graphite project in northern Sweden, and the Saxony Critical Minerals project in Germany. Although those two, the latter two projects have been advanced as of yet. It also has the Elton Farm Carbon Credit project in Ireland too, which is involved in peat farming. But the primary focus has been developing the Orosur Rare Earths project to a point, and this is what the company does. Its strategy, or Carl Friel's strategy across the companies that he's involved with, is to build them up, develop assets to a point where they can either monetize the assets or sell them onto a bigger player. And they've now done that, or achieved that first phase, in a sense, with the Orosur Rare Earths project. In December, they announced the final results. They reported that mineralization had been intersected in all 13 holes that had been drilled. They confirmed a district-scale resource, which supports the company's strategy to monetize project through sale or partnership. Across these holes, there were some great results, total rare earth oxides and also heavy rare earth oxides, ranging from 2.7% to 33%. But in each case, the numbers in each hole were significant. And Aidan Lavelle, the chief executive, said of that the structures encountered at Dupedal and Ulster West, which are the prospects of drilling, demonstrates vertical continuity from surface to outcrops up to 150 meters in depth. Now, since the results were announced from Ulster, we've not heard any further news from the company, but I would expect the next announcement to be along the lines of the plans to monetize the assets and to move forward from there. But the market capitalization of the group is still around 13 million, which is interesting because when you compare companies with similar assets, you'll see market capitalization often half or less than that. And I think that market capitalization is due to Carlfield's ability to secure a result or a sale or monetization of the assets. People trust Carl and his team to do what they're doing. There's also Jack Kelly on the board too. I had a long chat with Jack at Minds of Money last year, in between interviews there, Mark. And Jack was very sort of bullish about the prospects for EGT going forward this year. So at 9p, you're still under the IPO price. I think this stock offers great value, given that all the work on the Ulster Rare Earths projects has now been completed to this point.
Good. I think, as you say, holding that valuation amongst everyone else is, in this current climate, is good. I mean, maybe will they need to raise money at some point? Could that be a slight risk there to how the market might, sort of see that and price it? What do you think?
Well, I think the company raised enough money when it came to market last year. They run a capital light model, so they will just have paid out what's been needed to what they've needed to throughout the year. But obviously, when the asset gets monetized or sold on, that then brings the money in to develop the other projects or buy other assets and so on. So if you actually look at the share price chart, I think it's held up very well, versus the IPO price of 10p. And so it's come off the year highs, but I think given where its peer group are, I think it's really outperformed the market. So and I wouldn't bet against that outperformance continuing throughout this year.
Mm-hmm. Okay, good. Thank you, Alan. Good to see you, a European commodities, metals focused company there. And Cyprus, I know, of course, very well known for its copper, isn't it, in Cyprus? So.
Yes, it is. Yeah. Well, again, they had some results from there earlier in the year from sampling. I mean, that's not the primary focus right now, but sure. Where they've done work, they've obtained decent results, and that's important. So, yeah. Good.
Thank you, Alan. So, Dan, let's finish off with Immupharma. So, a pharmaceutical. We don't talk many pharmaceuticals recently. I think we've talked quite a lot during the COVID time. But are there still farmers out there?
Yes, apparently so. I'll just quickly go through this one. So, like you say, Immupharma is a drug development and discovery company, ticker IMM. So it's been pretty exciting. Immupharma it's risen by over 200% year to date from announcing breakthrough advancements in the preclinical research program for its autoimmune therapy, which is called P140. So Immupharma says P140 has the potential to provide a new standard of care therapy for the treatment of lupus. So as well as improving the living conditions of an enormous patient population, P140 represents a huge economic opportunity, I think, quite clearly. And that's why the market's responded so well to the company's breakthrough findings, which, in its words, paved the way for earlier and more accurate diagnostics, improved the ability to identify patients most likely to respond to P140, and improve monitoring of patient responses to treatment with P140. So the latest development with Immupharma this week came when it raised around 2.9 million at a 12.9% discount to the market. The raise was backed by institutional and other investors, led by the company's large shareholder, Lanstead Capital. And the funds will be used both to invest further in developing P140, and they also provide a clear cash runway to the company to at least the end of 2026, which it says strengthens its balance sheet for discussions with pharma companies on licensing P140. So that's encouraging. The reaction to the raise online seems pretty split, and the share price has dropped a little from its 5.9p high in response. There's a bit of concern about Landstead's increased holding and its intentions, but others believe it's just good that the raise is out of the way. You got that cash runway secure, and they feel the dilution is outweighed by the potential long-term value that can be generated by commercializing P140. So, just to round out quickly, I think it'll be interesting to see where the stock goes from here as more developments about P140 are released. Immupharma itself spoke of in its latest release of 25 being a transformational year for the business. And after such a strong start, there's clearly a lot of people hoping that's the case.
Good. Alan, was it on your radar?
Yeah, I actually saw a presentation from Immupharma a couple of years ago at it was a proactive event, and I think there's been a significant change in the management and the structure of the company then. But I know when people see Landstead involved as a shareholder, they often balk because, of course, Landstead's association is often perceived as negative. But if the company is on track for growth, if it's funded and Landstead are actively participating in that, I don't see that as holding the company back. So it's good that they're in this position. That's really strong.
Yeah, definitely. It's one I think I want to do some more research on, and perhaps, Mark, we can do a bit more of a deeper dive into it at some point.
Good. Well, feel free, Dan, do some more research. We can maybe have them as our feature 1 week. But thank you. That was very good. We've done all that in 45 minutes. Thank you. We covered quite a lot there. And while we were talking, I did manage to find one of the adverts for On the Beach. I'm just going to play it as a bit of an outro, just because I think it's a very it's a very British sort of advert that did make me smile during the recording. If you notice me smirking, but. We'll leave this as the last word.
Booking silly, booking smart, booking silly, booking smart. Be a booking hero and get free airport lounge access with On the Beach. Celebrate your smarts, bury yourself in the buffet, and get ready for some holiday luxury with your 5-star home. Holiday heroes, stop booking around. For free airport lounge access, search On the Beach. At all protected. On the Beach.
There we go. Well, thank you guys, and enjoy your weekend.
There you go. What a quality advert, eh?
Thanks, both of you. And we'll speak next week.
Yeah.
Cheers, guys.
Cheers, guys. Thank you.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.